Welcome back. It's me, Adam, and you are watching Unlimited Options Investing. So Apple numbers are out. They beat on their revenue and their profit on the top and the bottom lines. But as a disclaimer, what traders tend to do with Apple stock into earnings is they bid up the price up until a key resistance point. And what usually happens is that investors start to digest the numbers, and all of a sudden, right after the earnings, that enthusiasm comes out and the price starts to slowly go back down to earth. However, the way things have been going as of late, over the past couple of weeks, with the market recovering, Apple has been hitting a key area of resistance at about $160 per share, which coincides very exactly with the 200 simple moving day average on the daily time frame. Now, this is a key area because on the Nasdaq or the S&P 500, we're also reaching key areas of resistance. So my whole thinking is that Apple was the most important company or stock to report, because if they're able to reclaim that 200 simple moving day average and all of a sudden what was once resistance is now becoming support again, all of a sudden things may not be so bad as they seemed. All that noise is being blocked out, and all of a sudden we're breaking through those key areas of resistances on the S&P, the Nasdaq, and the biggest stock in the world and biggest company in the world, Apple. So Apple beats on revenue and profit, expecting growth to accelerate despite pockets of softness. So Apple reported fiscal third quarter earnings on Thursday that beat Wall Street expectations for sales and profit, but showed slowing growth for the iPhone maker. They did not provide any formal guidance for the quarter, and I'm pretty sure they haven't been ever since the beginning of the pandemic. So earnings per share, EPS, at $1.20 versus the expected $1.16 that was estimated, down 8% year over year, making sense with the macro, the way it is, recession fears, consumer sentiment, especially in 2021 being a recovery year compared to 2020. 2021 looks so much better, and all of a sudden comparing to 2021, of course, it's not going to be as enthusiastic, especially again with the macro, so down 8%. Revenue, a record revenue of $83 billion versus the expected $82.81 billion, up 2% year over year. And looking at iPhone revenue, we beat up 3% year over year. Services revenue, we had just missed by $0.1 billion. However, it is up 12% year over year. Other products, we missed on that, down 8% year over year. Mac revenue also missing, down 10% year over year. I guess because again, people don't need to change a laptop year after year, but it goes in cycles. So maybe every 2 or 3 years, people are renewing their iPhones and their MacBooks and their iPads. But again, right now they are down. iPad revenue, actually this one beating. However, it is down 2% year over year. And I remember actually, I think one of the recent quarters, all of these had beat except for iPad revenue, whereas now it's more mixed with iPad revenue actually beating this time. And we see gross margins also beating at 43.26% versus the estimated 42.61% estimated. Apple's revenue rose 2% during the quarter compared to 36% growth during the same period last year and over 8% growth in the March quarter. Cook said the results were better than expected, and CFO Luca Maestri said it was a challenging operating environment. Chip makers and other computer vendors have signaled that there is a slowing demand for smartphones and PCs around the world as consumers grapple with recession fears and decades-high inflation. Apple's soft growth may suggest that the consumer electronics industry, including leaders like Apple, is headed for a period of slow or no growth. Cook told CNBC that the company is seeing inflation but will continue to make investments. Apple's iPhone sales exceeded Wall Street's expectations, suggesting that demand for iPhone 13 models remains strong even in the second half of the product's annual release cycle. Apple typically releases new iPhones in September, and sales fall as consumers anticipate new models. Services grew over 12% during the quarter, although that is a decline from the 17% growth it posted in the second quarter and down from 27% growth it reported during the same time period last year. And Cook said that Apple has 816 million current paid subscribers, which includes anyone who subscribes to an app sold on the App Store, in addition to products such as Apple Music and iCloud. Apple also said that it spent over $28 billion on share buybacks and dividends during the quarter. So taking a look at Apple on the charts, so after hours we're at 162. I was looking for us to get above that 160 level. I didn't know if it was going to happen or not. It just depended on how earnings was going to show up. But again, expectations being low and things not being as bad as expected, the price goes up. It's funny how the stock market works. We hit a low back in June on June 15, 16, and since then we've had the staircase up, taking 2 steps up, 1 step back, and then a few steps up right now. Again, we've had a crossing of the moving averages, and this has been a pretty aggressive move for Apple stock, considering it was at 130, now at 160. So we have gone up quite a bit over the past month and a half, so I was expecting some kind of contraction, but right now, so far, we are above that 200 SMA, which we really want to see. We see this blue line that I drew. If we zoom out, it was a very key area for Apple. Essentially, it would find like an area of support a few times. If we did go below it, we would reach the 200 simple moving day average and find support over there. And right now, where it is at the moment, it coincides very nicely with the 200 SMA at about $160. So we do want to see us reclaim that 200 SMA as well as the blue line, because again, if we do take a look at the S&P 500 or the NASDAQ, the SPY is at a very key area at about $410 per share, but really having to reclaim that 410, which we haven't exactly done yet. We could very well sell off as we are at the top of this range. But if the biggest stock in the world, Apple, in terms of market capitalization, can reclaim the 200, maybe all of a sudden we are in full-on recovery mode. If we take a look at the NASDAQ, same idea. If we reclaim this $316, $315 level, all of a sudden we could look like we could be recovering. Again, especially with Apple being above its 200 simple moving day average, all of a sudden the next level we want to hit is about 345, which coincides with the 200 simple moving day average of the NASDAQ, the QQQ. So let me know in the comments below, are you an Apple shareholder? Are you happy with their earnings? Do you think that Apple is going to be able to hold its 200 simple moving day average, which is a big deal in my opinion? If it does, will it hold up the NASDAQ and the S&P? Let me know your comments below. As always, subscribe and like, and check out my description below for links to my Instagram, my Twitter, and my TikTok. I will see you guys in the next video.